Why did you not put a C? You didn't know what I know.
Hello everyone, Jumbo, and welcome to Wapipay, the classical leadership series. And we are very fortunate to be joined by, or kick off with one of the captains of industries. And I don't mean it lightly when I say captains of industries. One of the most respected leaders in financial services and banking for nearly over 30 years. And we're very privileged to have him here with us today, Mr. Kariuki Ngari, the Managing Director and CEO of Standard Chartered Bank, not Kenya, but Africa.
Both Kenya and Africa.
Both Kenya and Africa.
Yes.
What does that mean? How many countries are those?
That I'm responsible for Kenya, because we don't have a Kenyan CEO, that's me. And I'm also responsible for Africa.
Karibu sana.
Asante sana.
Karibu sana. A quick blurb on your profile, which is not contemporary to most business interviews you're used to. As this is a podcast, I believe it's your first podcast?
Yes.
Oh, fantastic. So we take all the reins and glory. So Mr. Kariuki Ngari, since his reign in coming back in 2019, has moved the bank from tax profits of 8.2 billion in 2019 to shockingly 20 billion in 2024. Dividends per share, this is what bites me hardest. I think I even mentioned to you, I wish I invested sooner. Has 3x since then, from 19 shillings to 45 shillings. And the big one, and I think most relevant in our conversation, is clients' assets under management, more than tripling from 69 billion to a record 235 billion. That is Mr. Kariuki Ngari, but that's not where we want to kick off. Maybe we can kick off with what are the three things about you that most people don't know and in your career?
Thank you. I think that's difficult to answer because three things that people don't know. I don't know what people don't know. But I can say three things that have guided those numbers you've talked about. It's discipline, clear focus, and focusing on the true north. Really focusing on what matters.
Yeah.
Those are the true things I would say.
Discipline, clear focus.
And focusing on the true north.
And focusing on the true north. Let me ask you a different question as we kick off, because we have a lot to go through. How are the cows doing?
Very well.
How many are they now?
Very well. No. An African man does not count. You don't count your animals, but they are doing very well.
I'm doing badly.
I've got a new feeding scheme, and the milk has almost doubled. So I'm very pleased with what I'm seeing.
I'm not doing as well as you. I've lost two calves and 2 mothers.
Never give up. That's part of the journey.
Yeah.
You revisit and ask yourself, why am I losing them? And then you do something about it.
Yeah.
But as part of the journey, you will lose. You lose livestock. You lose the good ones sometimes, painfully. But you have to revisit and say what happened. And then you correct it.
Okay. Let's go a bit back on your on how you started out, the young Kariuki. But most importantly, what are the key, you would say, trajectories from when you started off to where you are now? Maybe 3 of them to narrow down.
I would say, sorry.
No, go ahead.
I would say the first one is clearly making a choice to move to Standard Chartered. Because when I made that choice, it wasn't as rosy. And the job I was being offered then was paying me less. Standard Chartered was paying me less than what I was being paid then in the other
previous.
Yeah, exactly. But and this is the importance of having a mentor. My mentor asked me, in 5 years' time, which CV will look better? Don't make a decision based on the now, what you can see. Make a decision based on the 3 to 5 year time horizon. And that has helped me throughout my career because all my decisions are based on 3 to 5 year horizon. So I would say that's the first one. And then I moved to Standard Chartered. And then at some point I moved to a branch. I was in the head office. Mm-hmm. Then I moved to a branch. And that was a difficult decision because branches was where it really matters. Mm-hmm. And where the risks sit and where we used to see it as a place to, if you really needed to shorten your career, go and work in a branch because there could be frauds. There could be both internal and external fraud, and you as a branch manager are ultimately responsible. I took that decision, and and I took that decision because who was the head of retail then gave me a book, which unfortunately I can't remember anymore the title, but I wish I could find it.
Yes.
What I remember about that book, the story was the reason he asked me, "Do you know why generals are so respected by the troops?" And he told me the reason why generals are so respected by troops is because they've been to the front line. There's no general who's parachuted to be a general. Most of them, especially in the West, they've seen combat. Whether it's in Vietnam, whether it was in the First World War, all the generals, they've seen combat. So the troops really respect them. And he told me, yes, you're great in the way you speak. Yes, you're convincing. But your fellow branch managers don't believe you. They think it's theoretical.
Yes.
Go to the front line and prove it.
Yes.
And that was a turning point for me. Because I was in the front line, I could speak with authority. And then at some point, I left Standard Chartered. I went to Barclays then. New learning as well. Everything was a growth story. I was part of the bank. I was part of the team that really led the massive bank transformation of Barclays. And that completely transformed this sector in 2006, 2007. In terms of opening branches in weeks, not months and years. And then I came back. And then the next pivotal moment for me was leaving Kenya and working in Singapore, gaining international experience, understanding. So all those, I would say, those are the clear marks that have been very transformative to
your career.
See to where I've reached.
Interesting. You mentioned that your mentor said to you to join Standard Chartered Bank. I don't know if you remember in my final interview, in joining Standard Chartered Bank, what you said to me about the salary that was being offered, having come from a merely 40,000 shilling salary, from I think it was offering just over 150 or 100 or 200, I can't remember at the time. Do you remember what you said to me?
No, I don't remember. But I must have advised you not to look at the salary.
No. You told me, first of all, you're only going to pay me half of it. And you asked me a few questions. One, do you have children? I said no.
I'm sure you did have.
One, are you married? I said no. How many rooms do you have in the house you live? I said 1 bedroom. Are you sure it's not a bed sitter? And that was the interview. Based on those answers, you said you're going to have half. You don't need all this money, it will spoil you.
It has worked well for you.
Indeed.
Yes.
Those are very interesting milestones. Would you say in your career you were selected or you worked hard?
I think it's both. To be selected, you have to work hard. You have to stand out.
Is it? Not always. Some people don't work hard and they get selected.
I don't know about those ones. But for the companies I've worked for where meritocracy is so important,
Yeah.
you have to work hard.
Yeah.
Because if you don't work hard, you eventually get found out. You eventually get caught out.
Yes.
When I look at my career, it's been mainly, I've grown through the retail side.
Yeah.
It's only now when I became CEO in the last 6 years, I'm spending a lot more time on the CIB side. But you can't hide. You know, when retail is about numbers. You know,
Yes.
you're meeting clients every day, you're persuading them to buy your products. You can't hide. So
Yes.
if you get promoted because you're not working hard for any other reason, you'll be caught out.
Yes.
So I believe you have to work hard to be selected.
And how will
And
you...
every good leader, if you work for a meritocracy-driven organization, will want to have good people around them.
Absolutely.
So why would you make the mistake of not putting good people around you?
Yeah.
You will burn as well, sooner rather than later.
And if you work hard, do you have to work at getting noticed so that you're selected?
Oh yes, otherwise what are you working hard for? I think it's important. People underestimate the power of networking. It's important to network. You've got to be known that you exist.
Yes.
And, you don't just double down. I meet a lot of people who say that in my organization, and even outside the organization when I'm talking to them, where they say, I'll be noticed anyway. Let me just focus on my work, do a great job, and I'll be noticed. But there are many other people just doing exactly like you.
Yes.
So what are you doing to give yourself a head start? Life is about a head start. What am I doing to give myself that little advantage that makes me noticed? That is important. So you can't just say, let me double down and work hard. Because There could be 10 other people working just as hard as you, but then there are 2 who are standing out and they've been noticed.
Yeah.
So when the opportunities come, they've already got a head
The
start.
ones who
They've already got a head
start.
start. Even if they go through the formal process of an interviewing, they've already got a head start because they are known, they've networked, they know more than just the work they do. So you've got to network, you've got to get out to be known. It's not enough to sit. Yes.
Knowing you from my experience as my leader and my mentor, you're very passionate about service excellence and very passionate, almost incestuous about numbers and metrics. What values, what values would you say that you have either innately had or developed that have helped you rise to the leadership board that you are in right now?
You've actually answered that question. It's that focus on numbers, because that's what I call the true north. The true north. Because the moment you focus on the numbers and the metrics, you avoid politics. You avoid subjectivity. You avoid, I like so and so. You avoid all that. You cut through the trash and you really focus on what is important. When people know we are going in this direction, then there's no doubt about what will get you to that other position. So that is very, very important. I think it's a value that all leaders should embrace, because then it avoids ambiguity, it avoids subjectivity, it eliminates that favoritism, and it becomes very clear. What do you want to achieve? This is what you want to achieve. And it's not just a matter of in the companies, even governments. When you look at some of the very successful governments in the world today, you'll find they're very numbers driven. Whether it's in matters of healthcare, they will focus on healthcare. How many people, how many lives are we saving? How many vaccinations for children are we doing? They're very, very focused, very, very clear. That removes any ambiguity. And that is why it's important. And that's what has driven me almost throughout my career.
Fantastic.
Yeah.
We want to get into now industry, the exciting questions.
I thought that's where you've been all this time.
Like I said, this is a long format discussion. Okay. This is not a business review.
Okay.
This is a discussion about leadership, career, entrepreneurship, technology, and more so we'll come back to career, especially for the young ones, and the comparison between employment and entrepreneurship. But as we launch into the industry, I think we'll cover 4 areas, maybe Standard Chartered, where I'm sure your team have carefully briefed you what to comment and not to comment on. But I wore a tie to make sure that we take it as a banking conversation. But we'll touch base on 2 areas, both macro and micro, and then finally tech. You're an economist from my brief history, so the macro and micro will be interesting. Let me kick off with Standard Chartered and you as a leader and the demonstration you've had in the successes you've had, and congratulations. In the Kenyan landscape, how well do you think banking is doing?
I thought you're the one who should tell me that, because you're the.
I'm a fintech guy.
I believe the banking sector in Kenya is doing very well. Just look at the 2024 numbers, which all of us published.
Yes.
In terms of return on investment, because that's ROEs. That's what the shareholders are looking for. In terms of the numbers that were posited, and also looking at the profitability, the numbers that has gone up. We had a very successful year, and we're very pleased that we're able to pay a record dividend from our record income. So we are pleased. So I would say yes, the banking sector in Kenya has been resilient. It's been profitable, and it measures up. We've gone through some tough times, but the banking sector has been able to manage through those tough times.
Yes. We've
got a very supportive regulator. If I look at 2023, 2024, when Kenya had a really serious challenge on the FX market, we are able to bounce back and have a vibrant foreign exchange market as we speak today. So we've gone through that. If you look at the years of the rate cap, the sector survived, and we managed to come out through that pretty well. If you look at COVID, the sector survived. But most important also is supporting clients. The sector is not just surviving on its own, because at the end of the day,
customers.
There has to be customers, and you cannot forget them.
Yeah.
So whether if you look at how much the sector did in terms of giving the clients the reprieve they needed to be able to survive through COVID, whether it was loan restructuring, that has helped. So I would say yes. And the way the sector continues to adopt technology as a key driver, that's important.
So
And that has helped in financial inclusion in a big way.
One thing you haven't mentioned is it a factor of the economy? I've heard you say the regulator. I've heard you say customers and clients.
Yes, definitely, because we're not operating in a vacuum. It's like a fish operates in water. So the fish will never mention water.
So the economy is doing well.
Oh yes, I think yes and no.
Okay.
It can do better when you look at the potential. Last year, the economy in Kenya grew 4.7%.
Yes.
Kenya should do better. I think there's no reason why Kenya cannot be at 6, 7, 8%. We've done 7% before. So the opportunity exists for the economy to do a lot better.
Yeah.
And and that can only help. Everybody will benefit, whether it's the customers and whether it's the banks, that can only benefit. So yes, there are some sectors that are very challenging here, but also there are some sectors that have done well. So looking at the economy, looking at the macros, they can be better.
Yeah.
But the good thing right now is, especially when I compare across most of the markets I look after, where inflation in quite a number of those markets is in the higher 25, 30s. Our inflation is below 5. It's within the target band, the central bank rate. So our macros is supportive of our takeoff. There was some difficult decisions that the central bank had to take, the monetary authorities, to tighten so that to avoid what was happening. The inflation was going on the higher side, to manage the exchange rate, and those have come through. Yeah.
Let me ask more directly, as we are still on Standard Chartered. You focus, and you've said it numerous times, as Standard Chartered, on trade and investment. And I want to ask very elementary questions for the purposes of our audience. What is trade and what is investment?
Yeah, you're simplifying it. We focus on our CIB business, we focus a lot more on cross-border trade, and wealth. On our retail side, we focus on wealth management. Trade is what enables an economy to move. And in the simplest of terms for your listeners, who I don't think are as simple as you trying to portray them, when you go and buy any product from a shop, that product has been manufactured. Somebody has manufactured that product. For them to be able to finance the manufacturing of that product, it's a trade. That's trade.
Yes.
That's trade is happening there. Yes. So if there's a payment system that you want to make a payment, whether it's a huge utility that has to make some payments, whether it's to buy some of the if you take let's say like a power utility, they need transformers. How do they finance those transformers? All that is trade related.
Yes.
So that is what, in the simplest terms, is trade. Is what you see every day in Kenya, and all of us are very good to see that. We call them market days.
Yes.
There's trade happening there.
Yes.
So how do you facilitate that exchange of goods and money? That is trade.
No, indeed. And our customers are the ones in Gikomba, Nyamakima, Luthuli.
Exactly. They all involved
and I'm
business
not
of
getting
trade.
to that point that they call it business, but it's actually trade because they're importing for goods and services.
They're importing for goods and services. They're selling. They need financing. All that is, it's what, trade is what moves oils and economy.
Yes.
And if you look at the history of Standard Chartered,
Yes.
3 weeks ago, I was in Malaysia where we celebrated 150 years. We were facilitating trade.
Indeed.
That long ago.
Yes.
So the early explorers, the traders. So if you look at the trade corridor, that's where Standard Chartered went and planted its flag to facilitate the trade that was happening between the colonies at the time. So that's why we say we are a trade bank. We are a trade bank. So when your new trade opportunities, new corridors are opening, then we are there to finance those corridors. So as we say, we are a cross-border bank to help our corporates, whether they want to move across, like now we are seeing, whether it's the Middle East into Africa or between Africa and Asia, or between the Middle East and Asia, the Americas, we are the heart of helping clients move into those spaces. Yes.
Indeed, you've pretty much described ourselves 150 years from now, but we're just a simple 50.
Faster. I know. You should get there quicker now. Everything now happens.
We're just a fintech.
Yeah.
But even more interestingly is on investment. And how do you make the decision to how to direct capital? across the different classes of assets, where to invest in. And I'll make a controversial statement to get your idea. Your thoughts, personally, as a leading banker. There's a conversation around the aggregation of deposits and products like money market funds that I think Standard Chartered has been very successful with in partnership with Sanlam, with SC Shilingi, and fantastic growth, which speaks to financial literacy really developing in the market. However, what are the choices in how you direct that capital? Because it appears the focus is actually on lending to government.
I don't think that's entirely correct, because I think there's I'll answer your question in two ways. There's how do you direct? First of all, it depends on the individual investor.
Yeah.
What kind of portfolio do they want to have? So speaking purely from a retail investor perspective, is where do you, first of all, how big is your portfolio? Because if you have a small portfolio, then you can't be in all the asset classes. You just have to focus and grow it. Then over time, you start moving into other areas. Now, if you're a large investor, ultra net worth, high net worth, as we call them, or really wealthy clients, then you can have a range. You can have a range and say, I want to put some money here, in whether it's mutual markets or, mutual funds or fixed income, or I want to do a bit of this, a bit of that. So you can be able to spread it. So
Yes.
it depends on where you are and your risk factor, which is important as well. The one you're talking about is now what is excess, and then that's what we put in T-bills.
Mm-hmm.
But our priority is not the government. Our priority is always client activity. The word that I used before, trade.
Trade.
If that is subdued, there's no demand, then of course you can't lend. You'll have excess funds, and that's why it's so important that the economy is doing well, because then it does well for the banks. So the banks will also do even better. However, please note that for a lot of business people, they don't borrow for the sake of it. They don't borrow and leave money in the account. They borrow for a need.
Yes.
So I've got big demand for X products, or there's a major expansion happening. Like when I look around your offices, all this construction going on, then you've got this piece of land, you've got a business case. That's when you approach a bank and say, I'm putting this building up. I've raised 40%, finance me the remainder of the 60%.
Yes.
And because you're seeing there's an opportunity, those buildings will be occupied. Whether it's hotel businesses, they'll be occupied. So we respond to the economic activity. That's very, very important. It is never, government lending is not our point of call. It's not our first port of call in T-bills. Unless the government, and we are very big in this, by the way, on infrastructure.
Yes.
When you look at some of the really big infrastructure projects we've done directly to government, if you take, and a good example is in Tanzania, part of the portion of the standard gauge railway, the SGR, the building, we raised $3.4 billion. So those kind of projects we do. We do big transformative projects. We've done some very big projects in a market like Angola as well,
Yes.
as far as on water is concerned. So
Yes.
they are very different areas. So that, yes, you can say we lend to government for specific projects that are transformative for the economy. Yes.
No, that's great. And I think I'll slightly slow down and go back to, how in the economy we've overcome challenges. We came from an interest capping regime, and then the banks moved into a risk-based pricing regime to try and get people to access more loans. I think the CBR dropped 50 basis points in February. I think MPC meets again next month. We don't know if that will continue dropping so that loans are accessible to not just the big projects, but to the small businesses as well. However, we do see the interest rates north of the 20% for most of these customers. And there's a big debate about its risk-based pricing. And that's where the argument is, and I don't know what your take is. The high interest on risk-based pricing has led to very few assets walking through your door with interest in investing, whether it's a building or whether it's a business. Given the high interest, it's expensive, and therefore, given the high liquidity of the bank, you focus your capital on government lending. But that's just to wrap that one up. But you've answered the question.
It's not entirely correct. Like you mentioned 20s, we are nowhere there. I think when I look at our Standard Chartered, our rates are way below that. So,
Yes.
So don't give the impression that we are north of 20s. It's not. We are way below that. We are way below that number. However, I think for me, what is important is the level of economic activity.
Yes.
If the economy, if there's the level of activity, economic activity is subdued, or there are no opportunities, people will not borrow, regardless of the cost.
Yeah.
Because people don't borrow, as I said, people don't borrow for fun. People don't borrow money and then they leave it in the account to watch. People borrow because there's something happening and they'll say, I want to borrow money because this project is going to be viable. And then they come to the bank. Then, because the interest rates, okay, this is long time ago, because the time interest rates in Kenya were very high, people were borrowing. Because the economic activity was happening. There was a lot of things happening. And that's what is important. That's why to really stimulate the economy even further, because the monetary authorities or the MPC are doing the right thing, there has to be various levers that have to be pulled. The matter of pending bills needs to be sorted. When we talk about 600 billion outstanding, we talk about they are going through the process of verifying those bills. Let's assume 200 billion are not proven, but there's still 400 billion. That's a lot of money for an economy like Kenya's.
Yeah.
If you release that money, imagine what it does. Because it may be like there are many people, whether it's SMEs, and also there are large companies, but there are also SMEs. You've seen the government has been saying we want to fast track any pending bill below 10 million. There are thousands of small SMEs that are owed 10 million. That's a lot of money for them.
And
most of those companies, their wage bill never goes beyond $1 million in a year. So when you're owed a 10 million, it's substantial.
It's a lot.
What happens is you just cease operating. You stop operating. So let's not also forget that factor as well, that the economy requires all the different levers must operate for it to really seize the moment.
How does that trickle down to the small businesses?
That is how it trickles down. When you're holding 10 million, who is that? I don't like calling people small, but that 10 million is a SME, is a small and medium enterprise.
Yes.
It's that business that supplies, probably they're the ones that supplies meat in a school in Kirinyaga County or Pokot.
Yes.
It supplies meat. If you don't pay that supplier, he's got 3-4 employees.
Yes.
Across the country, that becomes millions. Yeah. They come and hold a seminar in your area, in your hotel. Then you don't pay. What happens? They've gotten suppliers who supply with the eggs, the meat. Everything is intertwined. Everything is intertwined.
Do you think we will ever get to a place of privatizing our economy and not almost 100% relying on government spending? This is a macroeconomic question.
I know, but please keep in mind that in every country in the world today, the government is the biggest spender. It doesn't matter which country. It's not. So what you're saying is not possible. You can never be 100% private sector. You can't. The government will always be the biggest spender. Take the US and some of the things Trump is doing.
Yes.
Or Europe today. When Europe says they're going to double their defense spending, who is going to build those factories?
It's the
Who is going to produce those planes, the new weapons? The government is going to pay for them. When you talk about the US, if you go to places like Seattle where Boeing is made and all these other companies within the US, the government is a big spender. So the government will always be the biggest spender because they get a lot of money from taxes.
They've got
everybody. So when the government stops spending, it hurts a lot more people.
Yes.
So you need a situation where the government is spending and the private sector will respond.
Yes.
That is how it works. You can't have one bigger than the other.
There has to be a balance.
They go in tandem. If you come to Kenya, for instance, and think about the government, if you look at the wage bill, whether it's the armed forces, that includes the police, all the institutions around that's government spending. When you go to hospitals, and right now the SHA, then you hear the hospitals are saying you're not paying us. What happens? Again, it's the government. It is not releasing the payments. Those hospitals shut down. What does that mean? So the government is everywhere, and you will never reach a situation where you say the private sector is going to dominate. It can't. It can only dominate through the government again. Exactly. Where the government now decided.
So the cycle needs to keep going.
Exactly. You have to keep feeding this. Feeding this beast. You think about some of the very innovative. We hear these ideas. where the government was talking about, can we buy all the uniform for the military, the boots, all the things they wear? Can they be manufactured here? That's a big impact to that economy. So again, it's the government spending. So that then it pays, and then a whole cycle is created. So that's important.
It's important.
Look at schools, for instance.
Is it a straight line that they borrowed from depositors through banks and then therefore continued with their business? Or I should not be thinking this way.
Who now?
The government is doing all that spending by borrowing from depositors through banks.
But there's nothing wrong with that. That's a model worldwide.
Fantastic.
That's why government issue bills, treasury bills, and I'm sure for your audience they invest. So they talk about investing in the US treasuries, whichever government you talk about, whichever government. Japan, the loan to GDP ratio is over 100%. But because they've got the capacity to pay, it's not an issue.
Yes.
Whether it's Japan, there are very many developed markets that are way above where Kenya is at
low
69,
teens, actually, yeah.
And there's no issue because as long as the government is paying that's how the real modern economy works.
Indeed. Yeah. Going back to credit, one final question as we're evolving out of Standard Chartered and largely into the industry. The credit environment in the market. Do you think we now have over 88 digital lenders? I think banks, even such as yourself, are digital lending. Do you think that a gap existed that they're filling that banks were not able to satisfy? And what's your take on them not being regulated under central bank requirements on interest rates?
I think the straight answer is, now I'll answer like an economist. Yes and no. Sometimes,
economists never has one.
On one hand, on the other hand. I think we should never look at, because there are 88 lenders, to say there was a gap that the banks were not filling. Because
in 2 years, 88 lenders.
Yeah.
Digital
I don't
lenders.
think there's anything. They just saw an opportunity. And the model, they came with a different financing model, which is very, very different. I don't know the numbers, but I don't think that out of all those people who are borrowing digitally, they don't borrow from banks as well. You find it's the same people. But people are using different models to finance whatever they're doing. And it's always very good for the economy. When I look at how deep Kenya is compared to other markets, whether it's on what you're calling the digital lenders, whether it's the SACCOs, whether it's the SACCOs that for employees.
Employees, yes.
Exactly. Or even when I see what the SACCOs do in the rural areas for farmers, whether it's tea, for dairy, for coffee, and then mainstream banks, investment banks, all these are important for a modern economy to function and function well. You need very many different sources of financing and very many different models. That's why if you go to more developed markets like South Africa, there are so many models. You'll find there are those specifically that focus on agriculture. There are those specifically that deal with long-term financing. Because some of the projects that are done require more than 30 years payback.
Yes.
A commercial bank may be able to do that. So there should be a whole range of all these financials. That is what a modern economy should have. For the digital lender who wants to lend 24 hours.
Yes.
To the one who wants to do a mega project between here and Nairobi and they want to pay in 30 years, like the expressway. That is how deep the financing model is. It's really saying how sophisticated a country is, and that's important for a modern economy, which Kenya is aspiring to be.
Absolutely. And financial literacy, of course, being led by one of your products, is Shilingi.
Yeah.
And it's done digitally as well as we've talked about digital lending. Now around payments, and this is where I'm passionate about, because that's my forte. Have we really used technology to drive transformation in the industry in the last 20, 25 years? Do you think we've actually transformed the industry?
25 years, you're going back a long way, because if I
checks.
If I look at M-Pesa is what, 18 years old now?
18, yeah.
18 years old, yes. Yeah. So 25 years is a long way. There was nothing. But if you ask me the last, let's say 18 years or 20 years, there's a lot. We've covered a lot of ground. One of the biggest challenges we Kenyans have, for your Kenyan listeners, we really like beating ourselves. We really like. So it's very rare that you'll hear saying, we don't spend enough time saying, really thanking ourselves on the good things we've done.
Yeah.
When I look at because of my coverage across different markets, I see you don't realize what we have.
Yes.
So yes, we have made a lot of progress. That you
Okay.
and I can be sitting here, and you're paying your workers in the remote. I don't know which is the remotest part of Kenya. I don't want to call it remote. Let's say the farthest point from here. You're making payment. That is progress. That could not have been happening the other time, just 18 years ago. If you needed money because Kenyans, we love agriculture.
Yeah.
We love farming. Whether we are making money or not, that's a different story.
Are they losing cows or not?
Exactly, that's a different story. But people would go and you're talking to your relatives. Are you going up country this weekend? You give them an envelope to go and take money because quite a number of the Kenyans who are in the city, their families are up country.
Yes.
You're giving an envelope to go and when you get your wages to go and pay your family that is on the other side.
Yes.
That is all behind us now. Everything is instant. And look at the transformation. Where somebody is going to a shop, you can send somebody to go and buy goods for you, and they're in a shop, and they just send you a screenshot of the till number, and you send money. That is progress. When I look at what used to happen many years ago, those 18, 20 years, or even 15, or probably 10, and you're abroad, and the family needed to send you money, or you needed to send them money, they had to go to a bank and fill those forms. What's happening today? You are there. Wapipay, for instance, you've got different models.
Opportunity.
There are other people in other markets, whether it's in Europe, in US, how they send money here. We have made progress.
Indeed.
We have made progress. Friction points remain. So that's where innovation comes in.
Yes.
And that's why competition helps in terms of removing those friction to make it easy and to make it instant. And when I see the progress that we've made over the last, I don't see most of these progress in the last 5 years.
5 years.
I'm very confident that in the next 5, it will be completely a very different landscape.
Brilliant that you said that, because when we're getting more into tech, we'll talk about the other new technologies. But in banking itself, there's this thing that happens in Kenya, more specifically, where after 3:30 p.m., I am not able to receive funds into my bank account. And not if it's a Friday, God forbid, it will not come in until Monday. And I know we can argue about PesaLink, but I remember even while in banking, the challenges in building banking. It was an innovator's dilemma at the time with mobile money growing. And now it's a trough of disillusion where a very successful industry is trying to build a competitive, not a competitive, but a service that benchmarks what's in the market. So how do we solve this cutoff problem in our industry?
I think we've already made good progress. PesaLink is a good example. PesaLink still operates after 3:30. There's work to be done because the limits you have to look at the limits as well. But it's work in progress, and that's why I'm saying we've made progress, and it's only a matter of time before we are able to really make real good progress. When I compare ourselves to other markets, we've made a lot of progress, and it's not just. And I'm not just talking about Africa. Even when you look at markets in Asia or Europe, they how much can you do after the cut-off times? Listen, you can't do anything after cut-off times. At least here we've got alternatives. So you continue operating even after the cut-off times. So I don't look at the glass as half full.
Okay.
So there's progress that we are making. We would want all to be faster.
Yes.
Definitely for people like you, you want to move very, very quickly. But at the end of the day, we always say there's a client, there are customers here, there's customer funds.
Yes.
How do you protect them? That's
Absolutely.
very, very important. So
Yes.
that becomes a priority. How do you ensure that the security that is required is very, very important? Because you don't want to take off for something.
Yes.
And then, oops, what has happened? You have a major crash and then people lose money.
Yes.
It's always very, very sad if that happens.
It's very painful.
Yeah.
And I think for yourself, even with Standard Chartered Bank, being an international bank, maybe there's opportunities to go past that cutoff globally with funds coming in from abroad. I know we've been very successful, and I love your optimism, very successful at home with the ability to move money. The question now comes in as we focus on trade and investment. How do we solve for that? Maybe there's an opportunity for Standard Chartered.
Yes and no. I think the reason I'm saying this is because that requirement for instant payments.
Yes. It's a real demand.
That's why that's where you want other players to come in.
Okay.
Because you want other players
such
to
as
come
ourselves,
in, such as yourself and other
and stitch up the
payment
problems.
providers. Yeah, because then you're talking about smaller payments. If you really talk about big payments, they are very clear. This is how we operate. They want to be conscious about that. But other smaller payments, I want to do it on a Saturday. I want to do it on a Saturday. Mm-hmm. You want to allow room for other players because you don't want. Yes, we have been very welcoming. One of the things that I said a couple of years ago, and one of the things Standard Chartered is very keen on now is we look at partnerships. Mm-hmm. The days of we want to do everything ourselves. There are some things we know we can do very well. We will do those ourselves.
Yes.
But there are some things we cannot do well, so we work with partners, and we will work with partners in those kind of areas. So we're very open because the world has changed, mm-hmm. and the pie is big for everybody. And then there's a lot of specialization that is required. Mm-hmm. So you allow that to happen,
yes,
and to flourish, and then work alongside partners to make it happen.
I think the industry needs, and that's why you're a leader, as much optimism as you exude.
Yes. Because my view has always been, if you look at Kenya, we've had challenges, but
Indeed.
Look where we are. We continue to move. It's a question of leaders must provide the vision, must provide the hope, because that's why people leave. Because of hope. That's all that you can provide.
Absolutely.
And work through the challenges, because you can't despair and say, "Oh, this is challenging." Then who is supposed to solve that problem? So you say there's a roadblock here. How do we work at removing that roadblock?
Indeed.
That's very, very important.
Indeed.
Yeah.
Financial inclusion, it's at 84%. I don't know if that number is real.
Very good.
84 is high. I wonder how we get that number. But when you travel to the villages, like for instance, where maybe your farm is and my farm is, do you feel those people are financially included?
Very, very, very. They are very fun. What's changed, and we've talked about this many times. I'm sure you've talked about it, is M-Pesa.
True. I was avoiding it.
Changed. I know. But that's the reality. That today, that any part of Kenya today, if you go and you say you don't have cash, nobody looks at you in suspicion. They tell you, then M-Pesa me.
Yeah. Is financial inclusion...
Before, think about it. This is a remote place and somebody tell you, pay me through this payment system.
Indeed. And it's created an opportunity for people to think
exactly
in this new form of money transfer or new form of receiving money. Yeah. Do you think there's a correlation between financial inclusion and economic development?
Yes. Because the more people are financially included, the more they'll be able to access the products I was talking about. Those innovative solutions that you offer, then the people can be able to access them.
But our villages still don't look developed.
But what do you mean by development? Now you're going into the area. What do you mean by defining development? 30 years ago from where I came from, quite a number
the road is still the same.
I don't know, but that's not entirely correct. The statistics are not telling you that. Read the latest economic survey.
No, I'm going to my village.
No, but
there's financial inclusion.
You can't just take one portion and then make a conclusion like that. Look at the latest economic survey and look at then 10 years ago.
Yes.
How many kilometers of road in Kenya were tarred?
Yes.
And how many there are tarred today? Look at that. That is one good statistic. Look at how many 10 years ago or even 50. No, you're talking of 25. Yeah, let's go 25.
Don't go that far.
You're the one who used that number 25. So let's stick to the 25. Look at how many Kenyans lived in huts with no electricity.
Yes.
So how many Kenyans are living in
life conditions.
Proper houses.
Yes.
Today with electricity. So there are different ways of looking at it. And as I said earlier, you can choose to focus on this portal and don't look at anywhere else. Today, when you're going to Mombasa, you've got an option of either flying or the SGR. 25 years ago, you didn't have an option.
We didn't have an option.
You just took the bus.
Still on technology, and I'm glad we managed to get this far without mentioning M-Pesa. But the reality is, what we see in fintech is what we call innovation, is having multiple integrations.
Yes,
which,
correct.
In my view, is literally using an API to connect one ledger with another ledger. So say, the Stanchart TBBS system ledger with Safaricom's ledger to be able to using an API integrates those two, and boom, you've innovated. If you have to move information from one ledger to the next through APIs, doesn't it mean or doesn't it seem to appear that in that one ledger, you're not meeting all the customer needs?
It depends what you're looking at. Now you're talking like a techie. I think most of your customers and my customers, well, that's not what they look at.
Yes.
That's not how they think. You are thinking like a techie. They think, I want to pay X, which is the best payment method. Now, how you sort it out as a provider is your business.
It's your business.
Don't want to know. So I wouldn't. That's how I would answer that question.
Yeah.
If today you speak to the vast majority of your listeners who are based in Kenya, you hardly find any who is complaining about delayed payments. They don't talk about it because it's instant. They complain about my bank when we shut down for maintenance. That you've seen. Oh, it's a weekend when Standard Chartered sends a notice.
And why does it have to be a Friday?
So then okay. But that tells you that people what they're trying to tell you is, we don't care what you're doing behind there, but I want to do the transaction when I want to do it. And that is why we moved to midnight to 3 a.m. Then you still find people want to transact at 1 a.m. I don't know where they're coming from. But they still want to transact. So to be honest, so if you think from a client perspective, I want to be able to to access my money. I want to be able to make a payment when I want to.
Yes.
Now, how you do the integration at the back is really your issue. And that is why today, to be honest, let's face it, the regulator is working very closely with us. As you know, we are very heavily regulated.
Of course.
For good reasons, to ensure that all the payment systems that we can be able to undertake them. Think about it, Eddie, not even just 5 years ago, if you wanted to buy government paper, you had to go through, you had to fill some forms.
Absolutely.
Take it direct to central bank.
Have a bank.
Then have a bank account. Then today you can do it directly. We're making progress.
Indeed.
That's innovation.
That's innovation.
In my view.
I guess for me, sitting on future stage, that's not innovation.
I think
we still have a long way. We still have a very long way to go.
Yes, of course. There's no time you can say innovation you've reached.
Yeah.
But you've got to separate it and say, look at the progress we've made. Like what I've given you. You're giving clients the option to send money from here to Tanzania, to Singapore, to China. That wasn't there before.
Indeed.
So whether you want to call it innovation or you don't want to call it, it's progress.
Yes.
That is progress. In 5 years' time, there'll be something different. That is progress. So you cannot look at innovation in one, because like now today.
In one vacuum, maybe.
Yeah, because I don't know whether you think, you and I, do you think we think Facebook has innovation? You and I may think like that, but the younger generation who are born into with Facebook they don't think it's innovation. They probably say this is such an old company. But
in fact, they're not even using Facebook.
Exactly.
They've moved on.
Exactly. It's progress. There's something else. So all I'm saying is, at any one time in the industries we are, definitely in banking, when I look at you cannot sleep. You've got to always think, what's happening? What do we need to do next? When you look at specifically for Standard Chartered, there's a lot of training we are going through internally on AI.
Yes.
Because it's inevitable. AI is here. It's going to turn banking upside down. We have to be prepared for it.
Absolutely.
First of all, internally to understand it, to know what we need to do.
Yes.
Because it's going to be a matter of time that it's going to be everywhere.
Yes.
So that is, we have to be ready. You cannot sit back and say, no. I know some of the terms you like using things like an old traditional bank. They don't exist anymore. Otherwise, we would not have the clients we have.
Indeed.
We wouldn't be having them. But when I meet the clients who say, oh, Karaoke, you've got such a great app.
Yes.
I can be able to do all the transactions myself.
Yes.
At any one time, I can be able to do. I met a client the other day who was really excited to say, your app is great. There's something we do with my son.
Yes.
He's able to do the transaction in Asia. He can be able to see what's happening there.
Yes.
When I started banking, there was nothing like that. You couldn't even go beyond your branch.
Yes.
Forget about within your network. You went to your branch. Your branch is more heavy in Standard Chartered. That's where you do all your
you're going. And I remember the pressure you gave us to make sure that mobile banking is up.
Yeah.
Interesting that we've gotten into AI. You mentioned AI. When you think about the disruptions or the technology that you see and you hear about, maybe you get to read about, what excites you and what absolutely scares you?
What excites me is what banking will become. Because you alluded to that point in terms of we for quite a bit of time, I think it was early, when I started my career, we used to say banking with the bank and not the branch.
Yeah.
And we thought that was pretty innovative. Nowadays,
Banking is not where you go.
Yeah, it's what you do.
What you do.
Yeah, exactly. And that's coming alive. I think that's
Yeah,
exciting
yeah.
in terms
Yeah.
of. I remember when I look at my dad, God rest his soul. After the end of the month, you'd go to the branch, 15 kilometers away, spend the whole day there getting his money, then come back home. That was then. Today, you don't even have to. When you're paid today, you just get a ping, you get a notice.
SMS.
The salary has come, then you start making your payments.
Yeah.
That's exciting me
Yeah.
when I see how far banking has come. And then how bankers, we've all accepted technology is here to stay, and how do we use it to our advantage? I think that's very, very important. When I look at the amount of investment that Standard Chartered has done in the last 5 years, whether it's on our straight-to-bank platform for
Yes.
our corporate clients,
Yes.
or on our SE mobile for our retail clients, it's progress.
Yes.
That today, you have no reason whatsoever to walk into any of our branches. You have no reason to walk into our branches. You can do anything on your phone. To me, that is progress. What worries me is matters. There are new risks. Cybercrime cyber security is
Absolutely.
one big one.
Yes.
There's so much happening on your phone today that how do we protect you? How do we protect your money so that from the bad elements? So there are new areas we need to think about that as well.
Yes.
So that I wouldn't say it worries me because you have to invest in the people who are going to make that possible.
Yes.
So when I look at how much we are investing in fraud detection scenarios, so that if something start happening, the thread, let me not use technical terms, the engine that we put behind this is able to detect, this is not Ed's characteristics. It doesn't do things this way. And we immediately block block that account.
Indeed.
Block that transaction. So that I see that as an opportunity.
Indeed.
In terms of cyber, how we're going to protect your money, because now it's going to be in a very, very different space. So I'm excited about what technology is enabling us to do, but I'm also concerned about this. I don't want to use the word scared. It's how quickly can we ensure that
Yes.
you're protecting your money in this new environment?
You spoke about AI, and
Yes.
the big word, it's the fastest growing technology now. I spoke to somebody in government, and I thought they'd done an AI bill, but they said it's not a bill. It's actually a plan, but a well-detailed plan. And this year, there's a lot of discussion about agentic AI. I don't want to get into the technicalities, but what's interesting is what you've said about how you get into a process in the bank. And one of the things we're very good at, fintech or bank, is generating data. And then how do you use that data?
A lot of data.
To use technologies like AI. But one, and you said it's, we don't know, and it's exciting for you what banks will be. Banks have always been the source of truth. You make customers bring all the information to you, you store it in a core banking system. What happens to banking when it's no longer the source of truth, and I no longer need a core banking system to qualify how risky this customer is or the transaction, but I can fetch information and data from everywhere else?
I think for a long time, a lot of people have predicted the death of banks. It's not going to
I didn't
happen.
say death.
I know
the evolution.
I had your
So should you change your core banking system throughout the servers?
No, I don't think that the issue is anything wrong with the core banking system.
Yeah.
It's because there's banks, we have had such massive investment in these systems. However, we have to start asking ourselves, how do we now start modifying, or what is the best way to ensure that information we're able to retrieve it?
Yes.
I remember one client telling me the biggest problem with you banks is you have no memory. Every time I come to your branch, you ask me for my ID. It's the same question you ask me. Why don't you have a memory that I was here yesterday? I come for a loan. Why do I have to ask? Why can't you see that I paid?
And the regulator needs you to keep you for 7
Exactly.
years. So you have it somewhere.
But what is happening is cloud.
Yes.
Cloud that is changing things. And the good thing is about our regulator now is allowing us to do a lot of things
access
in
cloud.
Before that was not
No, it
happening.
wasn't.
And that helps, because then if you're in the cloud, the providers who are providing with this space are able to you're able to adapt and move to the latest technology. And all that information, then it becomes retrievable. I think it's a question of how do you able to see, this is Ed, you've got all this information, how quickly do we retrieve it? I look back, your baseline of 25 years. You went to Dubai. At the moment you arrive at the airport, you give a sheet of paper for
I don't
your
think my
visa.
career is 25 years. It's
You went with your visa paper, they looked at it, they allowed you in. Today, they don't even talk to you. You just go in, they tell you, look here, they don't even, they just stamp your passport because they've got all the information. And if you've been there before, they can see it on the system.
see it. Yeah.
It's only going to be a matter of time for banks. We are getting there. We are moving a lot of our platforms to the cloud. And the reason we are doing this is because when you talk about being an international bank, we want to be able to bank you across borders. We want, if today you are banking in Kenya and you want to go to work, you've been transferred to work in Dubai or in Singapore, that Singapore is not going to ask you for all the information again. Because they can be able to retrieve it.
Yes.
But then, there are issues of data, transnational, national data protection laws, going beyond borders. That slows us down. There's some of the things we'd like to do. And as I said earlier, banks were heavily regulated.
Of course.
So there's a lot of things you have to navigate and manage. But I have no doubt that over time, as time moves on, then all these will be readily available.
Yeah. And one final one on technology, and more specifically, karaoke, cryptocurrency, not blockchain. We've been talking about blockchain for a very long time. Cryptocurrency, more specifically, the actual value that is created using blockchain. And we've seen a lot of stable coins or stable cryptocurrencies, which match the real value of a real currency, more so the US dollar. I'd like to add another comment. We've seen the US dollar demand grow by continued use of the stable currencies, stable coins like USDC, USDT. We're seeing now these stable cryptocurrencies do more volumes than even Visa and MasterCard. What do you see in a future state and with the optimism you have in banking?
That
the relationship banks will have with cryptocurrency.
That's not my question, but I'll answer it. And I'll tell you why it's not my question. Is that the regulators will accept it.
Yeah.
And once they've accepted it and adopt it, they create the enabling environment for it to thrive.
Indeed.
If you look at the markets you talked about, where it's really doing well,
yes,
the regulatory framework allows it with very clear guidelines of what should happen. What I tell people, and what is very, very important, is we don't have our own money. We've got in excess of 300-400 billion in deposits.
Yes.
Clients' deposits. You've got to be very careful what you do with it. And that is why the regulators worldwide are very protective over the
deposits.
The deposits. Because if you really want to lose control, is lose people's savings. So I have no doubt that over time, as the regulators are warming up and saying, what do we need to do around it? What regulation do we need to put around it? That's going to transform, and it will be a lot more acceptable.
Indeed.
Banks, we are ready.
Indeed, and there's the treasury in Kenya earlier this year, I think released, or late last year released this one is a bill, a virtual asset service provider bill.
We're moving slowly.
We're moving slowly?
I think Kenya, we need to move faster as Kenya.
Yeah.
We've got this ambition of being a financial center.
Yes.
We have to do a lot more to become attractive, to be a proper financial center. In terms of regulations, in terms of guidance, we've got to be a lot faster in the way we move.
It is projected that Kenyans transacted over $300 billion on these stable coins and cryptocurrencies. And should be fast.
One unfortunate statistic there you aren't mentioning, quite a bit of it is going to betting.
Before we get into that, do you are we slow so that we can curb or
I don't think
regulate?
Let me tell you.
With the bill.
Of course we are slow. Because
or is it because of the grey listing that we're...
No. The amount of money you're mentioning means that Kenyans are doing it.
Yes.
Clients are doing it. So the challenge is, why are the authorities not ready to enable it? You see, once
oversight.
Authorities should never be behind people. Okay? But you should be in front of people. So when they are ready, you're ready for them. Because you know they are going that way. Do something about it. Because if you don't do something about it, then you'll have a problem with. The other day there was a big loss that was being reported. You saw about that.
Yes.
You don't want that to happen.
Absolutely.
You look at the pyramid schemes. It's not that the regular authority know that is happening. So it's a question of being ready. And I've seen in some of the markets we operate in.
Yes.
The regulators are ahead.
Yes.
So it creates an enabling environment for people to operate in. And it says these are the guardrails. These are the ones we have to approve. These are the approved ones. And they are sharing that information openly, telling the investors these are the approved platforms that you should use. So they've done the homework for a lot of people. But if you don't do that, then people do their own things. And before you know it, people are losing money. So you damage what should ideally be a very good platform. That is important.
Finally, on the industry and technology, I think we've seen in the last few months the capital requirements for banks going up to 10 billion. Yes. It's very hard for some banks to look for 9 billion. I'm sure you have it. But and then very quickly the moratorium on opening new banks coming off. What does that mean, and what do you think is the master plan there?
It's important to have strong banks. It's very, very important, because when you have strong banks, then they're able to undertake big projects. And people argue that the more banks you have, the more competition you have. That's not correct. Worldwide, it's proven it's not correct. It's better to have few banks, because then when they are few, they can be properly regulated, and the competition is more real and more intense. If you look at Kenya, for instance, 80% of the assets are considered in the top 10 banks. We've got 43. What's happening in the other 33? That's
the thinking. The tier 3s, the tier...
Yeah, what's happening to them? They are struggling with a much smaller piece of the cake.
Yeah.
But if you've got few strong banks, then they can take some of the really big projects that can be undertaken here. If you take some of the developed markets like South Africa, for instance, a lot of the projects are funded by the local banks.
Yes.
They're huge banks.
Yes.
Nigeria, the same, because they've got huge banks. And Nigeria, because of taking the decision to increase the capital, that's why their banks are all over Africa, because they've got excess capital. So it's a good thing. I think in terms of increasing the capital, you have few strong banks that encourages a lot more competition. That's important.
So it could be that just opening up the moratorium to allow these smaller banks to merge.
For a new player to come and take up a couple of banks
and create a new bank.
Much bigger and stable banking sector.
I think we're running out of time. I want to ask a question for the young people. Long format. It's long format. I know you want to keep going, but but I've just seen a heads up about the time. I want to ask about, of course, talent, youth, and the future. And we're talking about young people now who are starting off in their careers, and of course, unemployment still at its highest. It's heading for about 6% this year. So these young people asking themselves, entrepreneurship or employment? What would you say to that? What would be your take?
I think I would never rule out either. It's whichever comes first.
Yeah.
If you can be able to raise funds to be an entrepreneur, why not? And I'm speaking in a Kenyan context. If you're able to get into formal employment, why not? It's unfortunate that Kenya is not creating the jobs that it needs to create to take care of all the young thousands, millions of young people coming to the job market every year. So that's important, because that issue needs to be solved, and solved like yesterday. It's not something you can continue. And you can't, as a responsible leader, you can't say, all of you become entrepreneurs, because they don't have the capital. All you're encouraging is everybody to become a trader. Yeah. Importing somebody else's manufactured goods who've created jobs in their home market, do these jobs, and then we start everybody selling the same thing.
And
it's
dumping.
It's not a good model. It's not a good model. I'm a firm believer that you've got to create jobs.
Yes.
There'll always be fewer business owners, whether it's SMEs. There'll be the large ones. There'll be the smaller and medium enterprises that employ 5, 10, 30, 100 people. That's the engine of the economy.
Yes.
And that is why you notice, for instance, during COVID, quite a number of governments in the Western world, and definitely quite a number of governments there in Asia, they supported SMEs, because they knew that's where the biggest number of employed people is sitting. So if SMEs sink, then the whole economy sinks.
Yes.
So it's to encourage them not to. First of all, I'm a believer, never give up, because if you give up hope, then what happens.
Yes.
That things may not be tough now, but there's no reason why they'll not be better tomorrow.
All right. One final question before we go into the quick fire. And there's and this one, this is an this is an important one. You've mentioned it briefly at the beginning about what's going on with the US. We've seen the tariff wars, I would call, but maybe it's probably strategic and it looks like it's playing out.
I think so.
I think it's playing out very well. Being, of course, leading Africa, sub-Saharan Africa. These fights between the two, is it a case of fahali wawili wakipigana nyasi inaumia? Or is there an opportunity for supply chain to be redefined in terms of import-export trade and Africa almost being a way station for a lot of that trade?
I look at it this way. Africa has a big opportunity. We've talked about Africa Free Trade Area. That is important. Mm-hmm. How can Africa trade more within itself? Or trade within Africa is less than 15%. But trade within the EU, for instance, as an example, is more than 60%. So it's a big opportunity for Africa. And that is why, to me, I get excited when I see Tanzania doing the SGR, Kenya doing the SGR, Zambia at some point. Because when we start getting inter-Africa connectivity, then the Kenyan farmer can get their milk from Kenya to Ghana. Most of the countries in West Africa import their milk from Europe. Kenya sometimes dumps their milk from there. Yeah, exactly. So, and then also another challenge is Africa. We do this. We produce the same goods. So as we start thinking about how can we increase trade within Africa, is what can we do? What can we do within Africa so that we're able to trade among ourselves, and that will counter what's happening. Otherwise, right now Africa is a bystander. You know, you can see what's happening. Yes, Africa is a bystander. I don't think we've been mentioned at all in what's going on.
Whatever is going on.
Not been mentioned.
Economically, there's not even been an impact.
It's 1.2 billion people.
Yeah, it's a bit.
It tells you there's a big potential in this place, and we have to do something about it.
Indeed.
So I strongly believe that Africa can do more than it's been doing. It's something we've always talked about. Personally, I never see whatever Africa is doing as we are competing against each other. It's let everybody do what they need to do, so that you have a choice. I want the Nigerian to travel to Kenya for tourism, and if they can't fly, they should be able to drive here. Because then that way, they'll be able to drive that a lot more.
Yeah.
You know, once that's happening,
or a speed train.
Exactly, or speed train. That's the next one.
Yeah.
You know, when all that happens, that's why Europe trades among itself, because everything is whether by train or by rail or by road, it happens, or by flight. So all those options enable the trade. Okay. So the way I look at all these tariff wars and what's happening is Africa will rise and realize we need to prioritize ourselves, because nobody's going to prioritize you. We prioritize ourselves. Exactly.
Quick fire. Morning pass. We have something at Wapipay where you're a morning owl or early bird. So either an early bird or a late owl. Morning? Okay. One book that changed how you think.
That book I told you about, which I can't remember the title.
But you told me the story, so we'll have to find out. Maybe we can use ChatGPT.
Why generals are respected?
One general is respected. Have you used ChatGPT or Gemini?
Yes, I do.
You do?
Choice, sure.
So you prefer answers to blue links. The one quote you live by?
SCW.
What does that mean?
God, give me the serenity to accept the things I cannot change, the courage to change those that I can, and the wisdom to know the difference.
Fantastic. Inspiring. And if you are not a banker, what would you be doing? Hotelier. Brilliant. I think that's all we have here. One last quote to everyone.
One last quote is the one that I've just shared. And why it's important is because we spend a lot of time focusing on the things we can never change. And then that leaves little time or no time at all to change the things that we can. That's very, very important. In my career, that is what I've learned, and that's why I would say I've reached where I've reached. That I've reached a stage and I saw there are some things I cannot change. I work for international organizations. There are global strategies. There are things I cannot change, but there are things I can change. And that's where I spend my energy. And that's what I would urge anyone. Spend your energy on the things you can change. If you can't change anything, don't spend your energy.
Spend your energy. Thank you, Kariuki Ngari,
Thank
for
you very
joining us. In the first Wapipod's World Leadership Series, and it was opened by none other than my leader, my mentor, the man, the myth, the legend, the captain of industry,